Hello and welcome to 3.0 TV. I am Vishakha Thakur. A sharp depeg in USDe and $19 billion weekend sell-off have reignited concerns around stablecoin risk. With macro headwinds, looming ETF decisions, and shifting institutional flows, the crypto market is at a critical inflection point. So I am joined by Mr. James Butterfill, Research Head of CoinShares, to break down current market sentiment and regulatory catalysts. Welcome to 3.0 TV, sir.
Thanks for having me on the show.
So with USDe recently depegging and the market experiencing a $19 billion flash crash over the weekend, many investors are questioning the resilience of stablecoins and their broader impact on crypto markets. So from CoinShare's perspective, what does this episode reveal about systemic risks in digital assets, especially stablecoins, and how institutional and retail participants rethink their strategies?
There were some big market moves off the back of this, but I also think this is a bit of a storm in a teacup. USDe, you might have been thinking, oh, what is that? I've not heard of that stablecoin before. It's Ethena. It's one native to the Binance platform, and is what they call an algorithmic stablecoin. And we've had a few quite famous algorithmic stablecoins collapse. It is quite small in size, but it did cause problems because many people were quite highly leveraged on the Binance platform. And so they saw when the markets fell due to Trump's announcements, threats for China tariffs, it led to not only a fall on their underlying leveraged trades, but also what was backing it, that was USDe, their collateralization. So both fell at the same time. And that led to this significant price fall. And I think it was very much contained within the Binance ecosphere, but some people are even saying it could be as much as 100 billion is on the hook for being lost.
All right. And CoinShares has consistently published insights into digital asset flows. So based on your recent data, what market trends are currently shaping institutional sentiment towards crypto assets, especially Bitcoin and Ethereum?
Yeah, so I think this is important, the fund flows and how investors are behaving. And this is why I think the USDe problem is a bit of a storm in a teacup, because we're not seeing a huge reaction. If you look year to date, inflows have just gone past the record set last year at $48 billion.
Right.
And even last week, we saw $3.1 billion of inflows. So clearly very popular. Now, looking at how investor sentiment in these specific coins is changing, what we're finding is Bitcoin and Ethereum are very popular, but there is hype building over XRP, that's Ripple's currency, and Solana. Both of those are due imminently to be launched as an ETF in the United States, and there's a lot of hype around those. So we're seeing some quite significant inflows into those two assets. Step outside of that, there's very little activity in other altcoins at the moment.
That's right. And we will talk in detail about the altcoin ETFs. But as of now, have you observed any notable shifts in investment patterns?
Yeah, so I think earlier in the year, fund flows, investor behavior was very much politically driven. We had the Bitcoin Strategic Reserve Act, we had the Genius and Stablecoin Acts. I think the show's shifted slightly more towards monetary policy action. So ever since the Jackson Hole speech by Powell, since the FOMC meetings on the 17th of September, we've seen nearly $9 billion of inflows. So I think monetary policy action and the hopes for 2 more rate cuts this year are definitely having a much larger impact on sentiment towards Bitcoin prices.
All right. And we are currently witnessing a US government shutdown. So from your perspective, how could this impact crypto markets in the short term, particularly in terms of regulatory clarity or delay in ETF approvals?
There are multiple things influencing the price. So it's very clear the Trump tariffs are not so supportive of price. It's a reminder that Bitcoin is both a store of value and a risk asset.
Right.
And that event has pushed prices down. But when it comes to the shutdown, I think this is where it really plays into the hands of Bitcoin and why we saw Bitcoin prices touch 125,000. People were very worried about the fiscal and monetary sustainability of the United States. The shutdown erodes the credibility of the financial system in the US. And the longer it goes on, I think the more alarming it becomes. And, Bitcoin is a risk asset, but it's also a safe haven. It's a funny combination of assets. And I think with things like the shutdown, it very much plays into the hands of Bitcoin prices.
All right. So as long as the US government shutdown goes, it will definitely impact the crypto market. And October is a key month for altcoin ETF decisions, as well as 16 spot altcoin ETFs await SEC decisions. So CoinShares too has filed for a spot XRP ETF in the US, and October 25 will be a key date for SEC nod. So what made CoinShares choose XRP for an ETF, and your take on the likelihood of such a product launching in the near term?
Yeah, it's very difficult for me to comment specifically on timing, given our direct relationship with the SEC. But the main reasons why I invested XRP and Solana, I think they're the next two assets that have a huge amount of demand for investors, have some interesting fundamental investment rationale for launching. They're the key reasons why we launched them.
Now, with the FCA lifting the ban on crypto ETNs for professional investors, how do you see this affecting institutional participation in the UK? And will CoinShares also look to reintroduce ETN products for UK investors?
Yeah, so we already have ETN products for UK investors, but not specifically for retail. So this ban lifts it for institutional could already invest in these products, so they're already there listed on the products. There's been some delay with the FCA getting them listed on the LSE or enabled for retail investors. It's a little bit hard to tell exactly when, but we suspect by the end of this week, us and many of our competitors' products will be launched. We know there is high demand. If you look at, say, Hargreaves Lansdowne Fund Platform, 8% of its volumes were in MicroStrategy earlier in the year, and that's a well-known proxy for Bitcoin. So we know there's appetite for Bitcoin-related products. So we do expect, once it's launched, for there to be a flurry of investment activity for UK retail investors that have not been able to invest in Bitcoin in their pension funds and other ISAs since 2021.
So here in India, India continues to have a complex regulatory relationship with crypto. Any message or outlook you would like to share with Indian crypto investors as they celebrate Diwali and look towards financial planning for the coming year?
I think just start to look at it, the fundamental investment case behind Bitcoin. I think it's very easy to dismiss it as just another risk asset, just a highly volatile asset with no fundamental backings. I think you just have to start asking yourself the question, why is the US government buying it? Why is Luxembourg? Why is Abu Dhabi? Why are those governments buying it? Why are so many institutional investors buying into this asset? And I think it's a great growth opportunity that is genuinely going to transform the financial world, whilst also being a form of digital e-gold, which I know Indians are really like gold. And actually, that same investment thesis applies to Bitcoin in many respects.
All right, interesting take on that. And looking ahead to 2026, how do you see the digital asset market's future, especially around institutional adoption, tokenization, and regulated investment vehicles like ETFs or ETNs?
We are writing our 2026 outlook at the moment, and one of the key themes we're touching upon is something called hybrid finance. And that is the merging of the traditional finance world and the crypto world together. And that's something we're really starting to see now. BlackRock already has around $6 billion of real world assets. Many other banks, JP Morgan and in particular Goldman Sachs, are starting to really embrace the stablecoin and digital asset infrastructure and really understand the quick finality of trades. Trades can be completed in seconds. And along with all the custody challenges, all done much more efficiently. And so ultimately, that sort of merging of the two worlds, crypto and traditional finance, is going to be a big theme going into 2026.
Right. So banking giant Standard Chartered has set a $200,000 target for Bitcoin. Have you, set any target, or you have something in mind related to Ethereum or Bitcoin? Any specific price targets for both the top coins?
Yeah, so specifically for Bitcoin, we 3 years ago said by the end of 2025 we'd see 168,000 for the Bitcoin price. I think that's still achievable. We haven't changed that forecast. It's based on it cannibalizing market shares of other forms of money. So at the moment, the Bitcoin price represents around 10% of gold's market share or gold's market cap. I don't think it's unreasonable for it to be 16, 17%, or even 25%. 25% would be 250,000. Slightly hard to ascertain when that would achieve that, perhaps more sort of into the later into 2026, 2027. But certainly our year-end price target is 168,000. It's a long way to go between now and then. So please forgive me if it's not perfect in timing, but we certainly believe it in the longer term, so 3 to 6 months plus, that's quite achievable.
All right. Thank you so much, sir, for joining. And it was wonderful having you on the show as always. And thank you so much for sharing all the insights and sparing time for this interview.
It's a pleasure.